Hey everyone, and welcome back to the channel. If you're looking to build a reliable stream of passive income, you've clicked on the right video. Today, we're diving into the best dividend stocks to buy in 2024. Dividend investing is a proven strategy to grow your wealth steadily over time. But with so many stocks out there, how do you pick the right one? But you guys don't have to worry about that. I've already done the research for you. Whether you're a beginner or a seasoned investor, these stocks not only offer attractive dividend yields, but they also come from companies with strong fundamentals heading into 2025. From energy giants to tech leaders, I'll be breaking down companies that not only offer stable dividends but also have potential for capital growth. So if you're ready to supercharge your portfolio and set yourself up for a prosperous year ahead, make sure to stick around. Don't forget to hit that subscribe button and turn on notifications so you don't miss out on any of the stock videos throughout the year. Let's get into this video. The first stock that I wanted to bring up on our list is Microsoft. Guys, Microsoft is positioned to thrive and focus, especially with AI, cloud service, and gaming. Its cloud platform powers so many AI applications, and its strategy places AI at the core of its operations, which is likely to drive future revenue and growth, which is great for us stock investors. And you know what? Let's go take a look at the dividend yield just to see what we're looking at. As you can see, Microsoft has a pretty low dividend yield sitting at less than a percent. It's pretty low, but you guys got to understand that they just raised that dividend yield by 10% recently. And let's go look at the earnings per share. Let's go scroll a little down here. The earnings per share is about $3.10 a share, and then it's sitting at about $426.96 as of right now, which I think Microsoft is like a little inflated as of right now. It might have a little bit of a pullback, but like if we're thinking long term, it's a great stock to hold. I don't personally hold it. I hold an SCHG fund, which is an ETF that holds a bunch of technology stocks. But since this video is about you guys, I highly recommend you go like invest in Microsoft. Let's go check out the year-to-date statistics. Microsoft is up 14% this year to date, which is so great to see. And let's see how much it's up in the last year. It's up $101, aka 31% in the past year, and in the past 5 years, let's not be surprised, yep, up over 200%. Guys, Microsoft is a great company, and if you have like any competence with the future whatsoever with AI, gaming, and like streaming and cloud like platforms and all that stuff, I recommend you guys highly invest in Microsoft. Dollar cost averaging wouldn't hurt. Another stock that I wanted to show you guys, which is a little bit on the financial side, was MasterCard. While not a tech stock, MasterCard is favored due to its steady growth and ability to capitalize on long-term secular trends and digital payments, offering a strong margin of expansion opportunities. And although I'm a Visa investor, I genuinely think MasterCard is the better alternative. It's just, guys, look at this price here. It's as expensive as an ETF, more expensive than most ETFs. I ultimately chose the cheaper route when going with Visa when I really think a MasterCard would be a great investment, especially if we're talking about dividend growth as well. Because if we do take a look down here, the dividend yield is very low, lower than the last stock, Microsoft, that I showed you guys, sitting at about 0.5%. I know this doesn't seem like much, but this company is going to grow and grow over the years, not only in capital, but they're just constantly hiking their dividends. And just look how much they've gone up in the past 3 months. Sorry about that. They've gone up 15% in the last 3 months. And let's just see the last year. 34%. Okay, that is great to see, guys. If you have been looking to pull the trigger on any financial stocks or just looking to invest in a new stock, MasterCard is personally on my watch list. And if you're a little skeptical about it, go ahead and put it on your watch list and pull the trigger whenever you're ready. But you can't really, numbers don't lie. You just can't really look at these and just think this is a bad company. I would just continue to dollar cost average into this if I did own it, but it is a stock that I would like to add to my portfolio eventually down the road. And for the third stock, guys, I'm pretty sure you weren't surprised that I was going to throw Nvidia in there. Nvidia is just one of those companies that you can trust. They're reliable, they're steady, they're growing. I really like Nvidia, although I'm not like personally invest into them. Like again, I'm bringing up the SCHG ETF is because I don't like to put all my eggs in one basket, especially with the new businesses like Nvidia does conduct. And let's not forget, Nvidia is a leader in the AI and GPU business throughout the world. NVIDIA's chips are vital to gaming, data centers, and self-driving cars. The company's dominance in AI hardware positions it well for continued growth. Like, NVIDIA is just a very good company, guys. It's solid. It's only $143 a share right now. Let's go see how much it's jumped up in the past month real quick. Past month up 23% even. Beautiful. Love to see it. In the last year, In the last year, we're up about 246%. And obviously, like the shares look a lot different now since they're about like 1,100 shares. I mean, $1,100 or $1,200 like right before the split. I did pick up a little bit of Nvidia at like 95 bucks. It shot all the way up, and then I sold like when it was up when I should have just held because I would have had so much more gains now. But I barely started investing May 29th, so I can't really give myself a hard time for that one. I didn't know what I was doing, but you live and you learn. And last but not least, the final stock that I did want to show you guys on our list was Chevron. Chevron is one of the world's largest multinational energy companies, primarily engaged in oil, natural gas, and geothermal energy industries. And to be fair, Chevron stock has been a long staple in the energy sector, offering investors exposure to traditional oil and gas markets. It is a component of the Dow Jones Industrial Average and S&P 500, often seen as a blue chip stock due to its market capitalization, steady dividend payouts, and historical financial performance, guys. Chevron is a great stock. Let's go down to the little logistics that we have. As you guys can see right here, I am invested almost $1,600 in Chevron with a total return of $51.53 to be like, I mean, I guess just a 3% return, which isn't too crazy, but it is the only stock that I do own on the list that I did show you guys that I'm not like, it's the only stock that I handpicked and not that I'm invested in from like a third party, like an ETF. And the return has been okay so far. It's not too bad, but I'm mostly invested in Chevron due to the fact that they have a lot of plans for the future. And it looks like the Chevron CEOs are looking to strive for an energy transition strategy, investments in renewable energy, growth in natural gas, commitment to shareholder returns, which, would do great for investors like you and I. And the last thing they want to do is come up with more strategic acquisition, guys. And I hope as far as you guys can hear with everything that I told you that Chevron is definitely a buy. I would definitely go ahead and dollar cost average. I wouldn't go throw a huge lump sum of money like this in there. Like this was built up slowly over time, you feel me? Like I wouldn't really go, throw a bunch of money into this oil stock, especially with the interest cuts recently, but I would definitely go take a look at it, and I don't think it would be hard to throw some money at it. And before we go and end the video, I just want to go ahead and show you guys some more progress that I'm making in the portfolio. As you can see, we're up to $8,900, so close to 9,000, and most importantly, so close to 10K, guys. We're almost so close to our goal. I just wanted to go ahead and share that a little bit. As you can see, we're down $23 for the day. No big deal. What are you gonna do? These are my holdings right here, the percentages that I have for my positions, and I believe, can I show how much dividend income I make? No, I can't. This is just the cost basis right here, guys. Anyways, that's probably going to wrap up today's video, guys. Go ahead to make sure and like, subscribe, and if you want more videos like this, let me know in the comment sections down below. I hope you guys have a great day or night whenever you're watching this at, and yeah, I'll see you guys later. Peace.